this kilo bar of silver. The kilo bar was trading in the $800 range last year. So let's just say you saved the money, you bought the kilo bar and gave it to somebody, or you gave them $800 or $1,000 in cash. Kilo bar today trading at almost $1,100. So you have a 30% gain in this gift. And then what would the gain in this gift be? It would be nothing because cash is not going up. So there's no gain in cash. That's just fun stuff. So always got to buy hard assets. But what are we talking about today? Corporate giants, people that we love to hate. You got your Zuckerbergs, you got your Bezos, you got your Buffetts. What are these guys? What are Nvidia CEO? What are these guys doing? What's happening in the markets right now? And stock market's all-time highs. And when you're in a bubble, it feels great. Everybody loves a bubble. Feels good. You feel smart. You feel like you're a genius. You're making all the right moves. But when that bubble bursts, it's quick. It's fast. Bubbles do not burst slowly. They actually pull back very quickly. And this is historic. You can look at through time. So instead of waiting around, what's the large investors? What are these big investors? What are they doing? What are they doing with their money? And so you have. Let's talk about Facebook. Facebook sitting at $627, pretty significant gain. And Zuckerberg is cashing out $153 million worth of Meta, adding to whopping $2 billion in sales this year. So obviously he knows what's going on. It's his company. He gets to see the inside of it. He's moving away from some of his stock, and these are not planned sales. I always try to caution when you look at things that it could be a planned sale that just sort of has to happen. But these are not. These are just their choice. They're starting to liquidate. So we got Facebook, Zuckerberg selling. That's the first, major CEO. Jeff Bezos, 1.2 billion in Amazon stock, pretty significant, large sale. 3 billion in sales. So, and what are they going to do with their money, right? Like, where are they moving? So they're getting out of the thing they know the best. They're moving away. Obviously, there's some concern about a bubble. They're concerned about the value. So they're taking some chips off the table. And so these are the wealthiest people in the world, movers and shakers. And then you look at NVIDIA, Warren Buffett is dumping Apple stock this year. He's sold more stock than he sold, I think, in the past 20 years this year. He's sitting in a lot of cash. So you see these major investors. These are the people that are making some of the largest moves in the world, are liquidating the things that they know the best, and they're getting out of the stock market. So things will happen, but I think that they are concerned. They're concerned about the value. And, if you look at another really interesting statistic is the ratio of inside sellers to buyers. And so this is a really cool stat. This is basically people that are inside a company. And when you look at this, you can see it's a 6-to-1 ratio right now. So you're looking at 6-to-1 sellers, insider sellers, people within a company, C-suites, people that have significant shares are selling 6-to-1 right now. When was the last time that happened? When did you see a number like that? That was 2008. So 2008 was the last time. Can we pull that? That's a cool chart. Can we pull that chart up on I think that would be important for people to see that. Corporate executive stock sales reach all-time high. So you're looking at and I also like the fact that when you look at this chart, you can really see that you look at where the stock market is, and you can see that they're just looking at the trends, right? They're just looking at the trends of what's happening out there. And so, so you have Facebook, Zuckerberg selling, you have Bezos selling, probably going to buy another yacht or something. You have Jensen Huang, CEO of NVIDIA, also selling. So you have the major CEOs all liquidating right now, and then you have C-suite executives, six to one. And so, listen, they may be selling too early. That's the argument. Maybe there's a big run still potentially to happen, but they're smart enough to take a little bit off the table. Here's the chart for you. I mean, that's the S&P right there, continuing to skyrocket, and you're seeing that the growth there. It's going to pop up here in a second. You see the growth in the stock market, and then you see the 6 to 1. You see the sellers, and that's a pretty significant amount of people that are getting out of their own companies. So that's an important point. So I guess what it is that they're not selling all their stock, and this goes a lot to things that I really believe in, is that there is a time to take some of your profit off the table, look into other assets. I don't know what they're investing into, but tangible investments seem to make a lot of sense during these times. So that is one thing to keep in mind. And maybe they're worried about inflation. Maybe they're worried about rising interest rates, because I think, with inflation going up, it's going to be hard to lower interest rates. So there's a lot of things on the horizon there. But next thing I want to transition into is an inflation alert. Looking at some of the inflation numbers, which is something that I look at least once a week. I dive into a lot of different inflationary numbers. The Fed came out and said that inflation's at 2.7%. So that's for this month. That's going to make it hard for them to lower rates. I know they said they're going to lower rates, but if they're going on their mandate to get inflation down to 2%, they typically would not be able to. But I think we're in such dire situations in the economy that they may continue to lower, another quarter point. But one thing just to keep, when you break out some of these categories, the amount of inflation that we're seeing is so dramatic. One area is just orange juice. And, I like the orange juice one, especially because when you look at, you break down each individual thing. Coffee has also become much more expensive. But orange juice is up 327% over the last 5 years. That's just an astronomical number for something that people, want to enjoy a few times a week. It's just becoming unattainable. And I've seen these reports where people are like, eggs are becoming so expensive, orange juice, don't eat it. But, this is part of, as a human, you want to enjoy these things. These are things that we want day to day. But the inflation number is just getting so rampant. So 320% increase in orange juice. And specifically, orange juice had an issue because over the last 12 to 18 months, they've had a number of issues in Florida, number of storms. Hurricane Milton, I think, came through and caused a number of storms. So you had basically a shortage, which led to some of the increase, but not all of it. So we have a pretty significant increase in price of orange juice. So these are things to keep in mind. And each time we talk, I'll go into another specific area of inflation that is quite concerning. But orange juice is up 327% in the last 5 years. So now it's, end of year, we're talking about predictions next year for gold and silver. And so I spent some time just looking at the numbers, and, it's always hard because, obviously we had a dramatic increase this year in the price of gold and silver. But there's some pretty interesting indicators out there. So this article says that silver could hit $40 an ounce this year. It talks about some of the shortages. A lot of it is AI driven. If you look at the AI market, AI and silver really intersect. And so you have, $14.7 trillion going into AI over the next 5 to 10 years. And so there are tremendous uses that are going to need silver. So they're predicting silver at $40 an ounce this year, which is still below its all-time high. It might be a little aggressive, but that would be from today's spot price. If we do hit that $40 an ounce, that's a 29% gain. So I'm a little bit more conservative. I would say I think silver is going to hit 36, 37 this year. Maybe it touches on 40, but typically when it hits a 30 or 40 every $10 amount, it would have a pullback. So I think that maybe it touches 39, 40, but has a pullback, and I think we end in the 36, $37 range. Gold, Citigroup, Bank of America, JP Morgan, all these institutions, based on central bank buying, based on inflation not going anywhere anytime soon, they're all predicting about $3,000 an ounce gold, and I think that's a realistic number. Again, anytime you break that thousand, I remember when we're at 2,000. It tends to flirt and kind of be around those numbers for a while. So I would expect 3,000 at some point, up and down. And then, I think a lot of it does have to do with what's going to happen. Are we going to see a recession this year? So the yield curve did uninvert briefly, which is one of the indicators of a recession. Also, you could just have a bloated stock market, which a lot of people believe will have a pullback. And then obviously a lot of the agendas that we're looking to move forward with the new administration could cause some heavy inflation. And then I just don't know if we're going to see the job growth that we need coupled with the GDP growth. So a lot of indicators are saying that we're going to see some type of recession Q2 or Q3 of next year. And I think that my personal belief, and I've been saying this for a long time, is that if there is a recession, I think they will try to open up the money supply. I think they'll go back to some type of quantitative easing to get money out there, because if they can't lower rates, they're going to need to do something. They're going to need to expand, get money out there. So I think there's going to be some kind of money printing happening, which will be great for the metals. But overall, I think the smart money is being bearish right now in equities. They're concerned. Also, you have Bitcoin and a lot of these other areas, very speculative areas that are rising. And so you just, smart money is taking some of that money off the table and getting into assets that they, know and understand. So I do think the year will be quite exciting with the election, a lot of new people in office. But overall, I'm always going to be more cautious. And I think, as you're coming into the year, really look at what you have, what you own. I think it's a good time you're going to get your 401k, your IRA statements, really dive into that and look at the landscape of what you have and make sure that you're diversified in a way that you feel good about and your family feels good about. And, we obviously can help you in this area, gold and silver and the things that we know, but it's a great time to take a step back and really focus on yourself. So I also want to say thank you to everybody here, all my Noble Gold family, everyone here, happy holidays. I know some people are going to take a little bit of time off. And then all the clients and everything too. I just want to say thank you for everyone that's trusted us this year. We really appreciate you. We are a U.S.-based business. We employ, almost 40 U.S. employees. So we do what we say, and we keep the money here in the U.S. So I do want to say thank you to all our clients and everyone, and happy holidays to all of you. And to end, I just want to go over some of the promotions we got going on. Silver Eagle is the most popular selling coin in the world here. You got this as our promotion. So if you're looking to get some of this in your hand, if you buy some, just hold it up. Okay, I'll hold it up. There we go. Don't mess it up. Silver Eagle. If you do an IRA with us this month, you're going to get some 10 Silver Eagles shipped to your doorstep. So if you're looking to do something with us, and say for anybody that, if you have time this year, we have so many guides. We have our YouTube channel you can review. Call us, spend time with somebody on the phone, and allow us to walk you through what we do, and educate you on what we do, and see if this is the right time. But I think a lot of people have time off for the holidays, so I'd recommend just giving us a call and see if there's any way we can help you. But overall, I want to say thank you for everybody that watched, and we appreciate you, and